Hey, it's Mark Tepper here. And if you're watching this, chances are you've built up substantial wealth over the years. And now you're probably sitting there wondering, is my advisor really the right fit for me based on where I'm at today? And I can tell you, if your advisor isn't proactively reaching out to you to save you thousands of dollars a year in taxes, if they're not reaching out to you with estate planning strategies that can more efficiently transfer money to your beneficiaries, if they are not proactively reaching out to you with ways to optimize your investments, chances are you're working with the wrong people. So let's talk about the first major red flag that might allow you to find out that maybe it's time for you to upgrade. The first major red flag is that your advisor is a generalist, not a specialist in high net worth wealth management. When you were first getting started, a generalist was probably just fine. Maybe you had $100,000 to your name. Maybe you were just getting started saving $1,000 a month. But now you're dealing with real money. You might have 3 million, 5 million, 10 million, maybe more. You've actually outgrown basic financial planning, basic financial advice, and your wealth actually now demands a much higher level of sophistication. You probably need some complex tax planning. You need estate structuring. You need legacy and intergenerational transfers. What's the best way to transfer wealth to your children or your beneficiaries? Charitable giving, if you're charitably inclined and would like to benefit some nonprofit organizations. And then help with vetting private investments and alternative investments that aren't as easy as it might be to just invest your money into an ETF. And let's be honest, most generalist advisors they're just not built for that. Now, it's a dead giveaway that you're working with a generalist when they are a solo act and maybe they have like one junior assistant, one receptionist. You know you're working with a generalist when their go-to portfolio is just a cookie-cutter, vanilla, 60-40 mutual fund mix, 60% stocks, 40% bonds in mutual funds. If they don't bring up tax strategy, that's another sign that you're working with someone who's a generalist. If they've never talked to your CPA or estate planning attorney, that's an issue. If they treat all their clients the same regardless of their net worth, that is a dead giveaway. It's all one-size-fits-all, cookie-cutter, vanilla advice, and it's usually designed for folks that have a lot less than you do. Now let's talk about what a real specialist firm actually brings to the table. You want a CPA who's not just filing taxes and telling you what you owe in a given year. You want a CPA who's proactively meeting with you and having strategy sessions, trying to find ways to proactively reduce your tax bill every single year on a going forward basis. You want to have a CFA who's able to build a custom tax efficient investment portfolio for you, especially if you've got a lot of money outside of IRAs and 401ks where every single trade that is made could possibly generate a tax bill for you. So you want to have someone who can actually work with what you have and build around it. You want to have an estate planning attorney who's able to craft your legacy and protect your heirs and probably even work with you on some more sophisticated tax strategies as well to make sure they're covered both from a legal angle and also from an accounting and tax angle as well. And you need a team of CFPs who coordinate it all into one strategic plan, and those CFPs should then be focused on making sure that every single one of those moving parts and pieces gets implemented and you're executing on that game plan every single day of every single year. Now that is what we call an integrated wealth management model. Some might call it holistic, some might call it comprehensive. It's integrated. And in our case, we call that a family office style approach. And it is exactly what affluent families are demanding today, according to research from CEG Worldwide. Beyond CEG, Michael Kitces found that great advisors can add about 3% in additional value every single year. And believe it or not, here's the kicker, most of that value has nothing to do with your investment returns, with your investment performance. That's not where the value's added. It actually comes from tax location optimization. That's making sure that you have the right assets in the right tax wrappers. Tax-free money, tax-deferred money, fully taxable money. It's really optimizing your entire portfolio to ensure that your taxes are as low as possible, not just in every single year, but they're also as low as possible when it comes time to withdraw later on. They help with behavioral coaching, ensuring that you're not panicking and selling at the bottom and then following the hype and having FOMO, the fear of missing out, and then buying at the top when it's a little too late. So they help to manage your behavior. Beyond that, they help with withdrawal sequencing. And it's actually pretty interesting that if you have different buckets of money, you have some tax-free money, you have some tax-deferred money, and you have some non-qualified money, which means it exists in a fully taxable environment where every single trade could potentially have a tax consequence. There is a way to optimize your withdrawals in retirement to ensure that you're taking money in any given year in the correct percentages from those three different buckets of money. If you're able to do that alone, without any of the other stuff I'm talking about, that by itself can add an extra 1+% of value to your world every single year. And also, these advisors help with a rebalancing strategy. Again, ensuring that you're not doing the exact opposite of what you're supposed to do, that you are actually selling some at the top, taking some, locking in some gains and reinvesting those proceeds elsewhere, and buying stuff that might be beaten down when it's low, as long as you believe in the long-term growth story. If you believe that investment is going to come back, it would make sense whenever that thing pulls back that you would like to possibly buy some more. Now, here's a simple test. Ask your advisor how much they can possibly reduce your tax bill for you this year. If they hesitate, or if they say something like, well, hey, we really don't do that, that's a massive red flag. You need somebody who speaks the language of complexity, of sophistication, who understands that all of these things add value. It's not just throwing someone into a bunch of mutual funds. It's actually about ensuring that you are addressing the overall wealth management situation for everybody, every single one of your clients, through all different verticals. And if you're not with someone who can do that, it's probably time to take a look elsewhere. If your advisor is a jack of all trades, maybe working solo and giving you cookie cutter, vanilla, boilerplate advice, it's probably time to reevaluate, time to look elsewhere. Because your money isn't average. Your advisor shouldn't be average either. And look, we all want to make sure that if we have a more sophisticated situation in life, we want to make sure that we are working with people who can handle that level of sophistication. If this resonates with you and you want to see what a specialist team can really do, go to tepperzoom.com, book a 30-minute Zoom with me, and we can take a look at everything you're doing and try to figure out from a second opinion standpoint whether or not there might be room for improvement. We can figure out where you're doing well, where you may have a few gaps, where you might be leaving money on the table, and we will help you to come up with a game plan to address all that stuff.